Yo, John, what's up? Can you hear my mic? Yo, yo. Yo, what up? Alright, cool. Alright, awesome, awesome. I'll kick it off in like 6 minutes, let everybody else join. Everybody made some good money today? Yup, yup. Who do you have a date with? You went to Korea to go on a date? Damn. Luke, how come you didn't make any money today, man? No, it's not a new one. I've had it, but I just didn't unpack and set everything up until last week. I've been using my AirPods the whole time, but I had like a full stream setup because I used to stream Fortnite a long time ago, so I just busted out the SM7B and the Sennheisers. The fuck you mean, Luke? I know you can hear me. Nice, man. Quan, bring her home. Bring her home over here to the East Coast. Yeah, I used to fucking spank people on Fortnite. Now I'm too slow. My reflexes are too slow now. One v one you for $100, man. You don't even have $100 to pay me if I whipped your ass. All right, I'm gonna give it 3 minutes. I used to hack Fortnite. I used to use mouse macros. Like I used to use macros on the mouse, so I could just do like 90s really, really fast. Luke, I'll fucking crush you in Fortnite, man. No, I never played Grand Theft Auto. I mean, I think I played it a couple times back then, but it wasn't really my type of game. All right, I'm talking right now. Okay, okay, I'll go ahead and kick it off. What's up, everybody? Thanks for joining. Pretty much jumping on to do a recap of how OpEx went today. OpEx stands for options expiration, and generally speaking, they're very difficult days to trade, mainly because it's the day that you're expecting pretty much the highest number of like notional value of options contracts to expire, which means that you're going to see a lot more dealer manipulation. You're going to see a lot more false breakouts. You're going to see a lot more theta chop. Okay, so if you don't know what OpEx is, it generally happens on the third Friday of every month. That's kind of the day that you have to watch out for. In this scenario, in today's case, like which was June 20th, 2025, they were expecting a notional value of over $5 trillion worth of options to expire. So generally, like I think that's pretty much the largest we've seen. Um, I mean, actually, I don't even know. I don't think we've ever cracked above 5.5 trillion. So I've got to go ahead and double check, but let's just say like it was one of the largest like OpExes I've actually seen. So I usually don't suggest trading these days, or like I size down significantly and kind of reduce risk because it's very difficult to like see through the noise and like the dealer positioning and the shuffling. But today was different because we pretty much had Heatseeker with us, and it's pretty much telling us like how the dealers are positioning. It's also showing like when and where they're unwinding, and that's why we kind of had an edge today. So one thing that you have to understand is when you're trading on OpEx days, which is today, everything has to do a lot less with like actual price action and supply and demand of the traders that are actually trading the market, and it has a lot more to do with how dealers intend and plan to make that $5 trillion plus worth of options to pretty much expire in their favor. Like expire in their favor, meaning like they want to take a minimal loss and they want to get a maximum gain. Okay, so it's pretty much Hank the Tank says it's the largest ever. I'm pretty sure it was the largest. Like I don't remember like that number going up to 5 trillion plus. Like I think last time it was like 4 trillion or something. So yeah, pretty significant day, which kind of makes me a little bit more excited about the future OpExes to come because like none of it came as a surprise to us. Like the entire server, like even in the only bangers like free server with 750 members, like we did the 1 day trial on Wednesday right before Juneteenth. So people actually got insights with regards to how price is expected to move on Friday today. So let me just go back. Like I'll actually go back to the server itself and like kick it off and show everybody what it looked like on Wednesday close. Um, so Juneteenth was yesterday, and the market closed on Juneteenth. Okay, so the latest map that we saw on Heatseeker prior to the market opening today was this one right here. So this map was from Wednesday close. And if you look on Wednesday close, like you saw, like these yellow nodes are like the largest positive nodes, and we see one at 59.70 and 59.45. Like nothing even comes close to like these numbers. Okay, so right off the bat on Wednesday close, we're like, okay, like if the market ends up gapping down over Juneteenth and into Friday, then we can expect price to go back up to these nodes. Or if it gaps up over these numbers, then we would pretty much expect that pump to fade. Okay, so just keep your eyes on this. Like when I'm on YouTube stream, like I can't share my heat map and my trading view at the same time. Like it's a little bit awkward to do so. So you're just gonna have to kind of use a little bit of memory and go back and forth. Okay, like write these numbers down. It's 59.70 and 59.45. Like this is for June 20th, and there's no other like nodes here that kind of coincide with this. Okay, so let me go and switch back over to my other server. So in Asgard, like I have a bot that you can pretty much use to pull up like historical heat maps as well. So let me see. This is all in Eastern time, by the way. So earlier you saw like we had like 25 mil and 25 mil on 59.70 and 59.45. Okay. Now let's see what the map looked like this morning right at open. Market opened at 0930. This is the time, right? So earlier it was 25 mil, 25 mil. And one thing to note is that the futures actually gapped up today. Like if you saw the morning, like we actually gapped up. So let me see real quick what price SPX opened at. So the SPX open price was actually at 6,000. Okay, and this is the gamma mat right at open. And you see, even though we gapped up to 6,000, look at this 59. Is this right? Did I get this timestamp right? This is, so 6:20, 9:30 Eastern. Yeah, that's the time the market opened, right? If anybody is in chat in the Asgard server, let me know if I'm like misinterpreting stuff because this is pretty crazy. All right, so earlier we saw 25 mil, and like now you see this 5970 node. It grew by 5 times the amount. You're sitting at 125 mil at this point, okay? Which is an insane amount. Like it grew by 5x, even though the price actually gapped up and pumped 30 points above it. Okay, so immediately, like the risk to reward is on the downside, right? It's like if you're gapping way up above this, and then you have a 125 mil worth of like notional positive gex over here, like there's no shot you want to chase calls on this pump. Like even if we open at 6,000 and it pumped up a little bit, like those pumps are gonna fade. Like they're gonna fade no matter what because the 59.70 is so sticky. Like right from the morning, like pretty much what I mentioned is like this seemed like crazy obvious to me, which is why I was a little bit skeptical. And I was like, yeah, that's a little strange. Like why are we pumping and like these nodes are like 50 points and 70 points below, right? Like I was skeptical, so like I mainly told people to just like size a little bit smaller, like just trade it safe because OpEx can be very tricky to trade. But little do you know, like let's go back to let's actually go back to the chart. All right, so this is the trading view chart. Let me just open it up. All right, this is where we opened, okay? Like this is our opening candle, like we gapped up. And if you look, opening price was at 6,000. I've got our largest like node marked right here. I'll call this the king node. Okay. I've got this marked right here. And the big question that a lot of people ask is like, okay, like 5970 seems like an obvious target, but like how high and how far does the price pump before it's safe to short it, right? Because like if you gap up and like you short it, you don't know how much more it could pump before it starts to pull back, right? Like one thing 100% sure that is like that number at 5970 is way too large to ignore. And any pumps that we get, by the time the market closes, eventually it's going to pull back, it's going to fade, and it's going to approach that level, okay? Like throughout the entire week, we've seen that. Like if we see a king node that is that, out there, where it's just completely dominating the entire map, price will eventually gravitate towards it. Okay, so that's the question a lot of people asked. It's like, okay, like, well, if you're trying to, if you want to go for a short, how do you get the best entry, right? And I teach this in the bootcamp sessions, but like most importantly is to just kind of identify and mark the areas of like major resistance. So one particular area I'm interested in like would be right here. I might be interested in this point right here as well. But one thing I said in the morning is yes, 5970 and 5945 seem like likely targets, but like it's a little too obvious for me. Like I need supporting evidence that like we're hitting the peak and then we're gonna drop. So is Lambo in here? Because I think he's the one that asked me for this. But anyways, like he asked me. There was somebody in the chat that asked me like, how did I know 6920 was gonna be the top, right? First thing first, like let's assume these lines are not here. I had this resistance level drawn right here at 6018. And one thing that's been working really, really well is like the glitch dots on the 3-minute map or the 3-minute chart for me is literally like my bread and butter. Like, this one worked, this one worked, this one worked. And I was like, damn, like this shit's been spot on lately, right? So the next thing I'm looking for is I'm looking for any kind of like double top, and I am looking for a potential bearish signal on my glitch algorithm. So this is double top line right here. All right. So as we're approaching this, like I saw this flash right here, and I was like, okay, that we're at 6018. What time is this at? Right, 9:45. Um, and I actually don't like wait until it taps. Like usually, as the price is approaching the double top, like I'm already going to be looking. So let's say, all right, let's say 9:44. Let's go ahead and check 9:44 what the map looked like. All right, so I'm pulling it up at 9:44. Let's see how things changed. Okay, so even if you look at the Vex map, like 5970 and 5945 is like straight dominating. Like the largest node after that is like what 6045 at 556, 6060 at 670. This is not even 5 million. This is 5 billion. Like it's negative 5 billion and negative 4 billion, which is freaking massive. Okay, so like I'm not ignoring those. Even if we went here, like if you see the 5970 and the 5945, there are still pretty much the dominating like numbers here. And if you look here, the next highest yellow node is 7.3 million at 6025. Okay, so as we're approaching that 6025 level, I'm expecting the law of the yellow node indicating that as price approaches it, it's going to deflect off of it anyways. So there's a couple of signals we have here. We've got this 6025 peak, which is a high probability of rejecting and heading back down to 5970, which is the king node. Um, and then even on the chart, we have the price approaching this double top right here. And then right when I saw, like I didn't even wait for this candle to close, by the way. Like right when I saw this tap, this 6018, and then I saw this dot start to form, like I just went in on that. Like I went in on shorts, and yeah, I pretty much rode it all the way down. Like even as it was coming down, like I took partials right here, and the main reason I take partials right here is because you have a gap entry, and gap entries are generally like areas that like price could potentially bounce. But once you start filling into it, what I do is I leave my trailing stop here. I leave my trailing stop here, and then I write it down all the way. Writing it down, and like because we were expecting it to hit 5970. One thing you have to note is that to the upside it could become deflective, but also to the downside it could be deflective. So as it's approaching the king node at 5970, like you want to sell your puts into it. And I think I closed most of them here, and then over here I closed out my runners. And then you see a bounce, and then it like throughout the day, like it just keeps on coming back to like 5970. I know the one question that a lot of people asked is like, okay, like if 5970 is like a major wall, like how come price was able to break back above it at this time, right? And the one thing that I share with a lot of people is for New York session, 11 a.m. to 1 a.m. is like very, very low volume. Like it's ultra low volume. So you can see a lot more aggressive and volatile moves during that time. So pretty much like 11 a.m. to like 1. This is like a very suspect time frame to trade, okay? So I know like a lot of people like, it dipped down. And then what people did today, which I did not think was a good idea, was they waited for this little small tiny pullback. It was like literally like an 8 point or 10 point pullback, and then they entered shorts here thinking that it's going to go towards the next target of 59.45. Okay, now the reason that that generally is not a good idea is because the risk to reward is just not there. Like if you look at the node at this time, like you've got 42 mil right here, you've got 22 mil right here, right? So a lot of people think we're going to actually hit 59.45 if we break below 59.70. The reason that doesn't happen is because this 59.70 node is twice as strong as the 59.45. So in the best case scenario, you're going to be able to get like the midpoint, like 59.60 to 59.55. But there's a very high probability that price would dip down, and then before it reaches that 22 million magnet, it will bounce back up to the 59.70. Unless the 59.70 started to become a lot smaller. So for example, if this dropped to like 22 mil and then the 59.45 grew to like 50 mil, then you would hold for a continuation, or you would short the 59.70 down into 59.45, okay? But I think what happened is a lot of people missed the short at around 6020, and then it straight dumped, and then people pretty much got impatient. They're like they need to take a trade. Like they're starting to feel bearish. They're getting itchy. They're like, damn, I need to take a trade. And then they're like, after it breaks down, they're like, well, shit, I can't chase it anymore. So like, where's the best entry that I could take? And the best entry that they think they could take is a retracement, a bearish retracement to the 5970, and try to play it down to 5945, which they're seeing as a 25-point drop. But in reality, even if we rejected that point, it's probably not going to go lower than 5960, which means if you reject that, you got a 10 point. I mean, you literally have like 10 points to eat, which is just not good. Like 10 points with, hours left in the day is not good risk to reward, okay? So, does anybody have questions with regards to that first morning setup? If you have questions, just post them in chat and I'll go through them. Post them in the YouTube chat because that's the window that I have open. All right, so that goes over the first trade of the day, and I posted this in the private server that I have. I just kind of like walk people through the mindset and the logic, and I think after I took my exits on the 0 days here, I told them that I rolled them out to Monday puts, and even the Monday puts, like we caught the rejection and then sold for like 150% there. Yeah, like it's all about risk to reward, and especially like during lunchtime, like I tell people, especially like, hey, don't trade there. Um, at 6018, like let's just round up to like 6020. Like at 6020, you've got a minimum potential for 50 points, and 50 points on the SPX is massive. Like that's like almost a 1% move, which is pretty significant. And if you're getting a move like that, like your shit is gonna print at least 200 to 250% no matter what. Felix, damn, you going into next week right away, huh? Well, let me go through the rest of the recap first, okay? Yeah, that guy came here for one thing. He came here for the map for next week. All right, so, okay, so 5970. Now that we're approaching it, like people that do have like a glitch algo that are part of the bootcamp, like I know people take the scalp here, people take the scalp here, they shorted here, they scalp the longs here, but it's all small moves. Like you're getting like 30% moves at best, or like 40% if you're lucky. I don't really care to play those ones. The next one that I was interested in playing, like I think even this move I missed it. Like 59.53, like we got down there. Um, Technically speaking, like this could have been like a pretty good long setup because we knew 59.70 was still the king node. So even after it dipped all the way down here, we would have went back up. The reason I missed this one is probably because I went out for lunch at this time, and I was busy stuffing my face with Korean barbecue. But yeah, we caught a good bounce here, and then we slightly broke back above 59.70, and then rejected again. Like we caught this rejection because 59.75, that's like 5 points above, and we kind of expected the rejection to hit there. And oh shit, yeah, I'm not on the chart. Sorry. All right, thank you. Yeah, so yeah, these dots are like they're like scalp algos. So blue dots mean like scalp longs, white dots mean scalp shorts. So generally around this range, like people were trading that, and then this is where I saw a lot of people get fucked up, like this right here. So starting at around 14:57 Eastern, let's go ahead and pull up the heat map to see what it looked like at that time. Not sharing a screen. Brian, can you see it now? You can see the Discord now, right? All right. So at this time, like people were still trying to go long, and like the reason I just didn't. Okay, can you? Yeah. All right. All right. So you guys see the heat map now, right? You see the heat map of the 59.45 and the 59.70. Like this is where like people were trying to go long, and then I told them like why go long, because we were at 59.60, right? And we still have like a pretty significant pull at 59.45. Like sure, it's not as strong as 218 mil, but if you're already at 59.60, Like that is above the halfway point of this range right here, which means that that's pretty much bouncing around and ranging at fair value. Like fair value can be determined based off of this. If you've got 218 mil here, and if this was like 218 mil, for example, like your fair value would be like 5957.5, like right where the midpoint is. But because the 5970 is stronger, you get a slight edge to the upside. So, something like 5960 to 5965 is good. The problem with this is that like if the price is there, like you just don't want to go long and you don't want to go short. Like the risk to reward is not there. Like what are you gonna do? Like you've got 5 points to the upside, you've got 5 points maybe to the downside, right? So despite me telling people not to trade, like I think people were still trying to scalp that, and it caused a lot of pain. Like they did that, and let's see what happened here. All the way from 2:57 p.m. today to 3:45, like the price literally did nothing. Like it literally moved between a 5 point range. Like that is OpEx for you. Like this is like literally what OpEx is for. Like they do that because they're trying to keep it in the range, where as long as they keep it in this range, they will expire as many puts and as many calls worthless as possible. Meaning they're just banking on their premiums, okay? And guess what happens at 350? Like this is the like I think I posted the screenshot of my trade. Like I entered 5970, and I entered 5970 like right on this white candle here. And the reason I entered on this white candle is because we got a pretty nasty dip down here to 5957. And one thing I knew is that for the MOC, we generally see a move in either direction, right? So I'll go ahead and show you how the map looked like at that point, and like how we knew we were gonna get an end of day pump. Like this end of day pump, like after I entered here, like this pump gave like I got out for 270%, but at the top of it, it was like 500%. Like it was a massive move in terms of the option contracts itself. So let's see what time this was. 3:45, 5:45, 15:45. All right, so let's see what the map look like here. All right. So if you look here, 5970 is still 219 mil, and then 5945 is 137 mil. And let's go ahead and see how this changed in the next 5 minutes, okay? Like just keep an eye on what it looks like. This is 1 minute before MOC. Okay, still looking around the same. And there was literally a flip that happened like just a minute after, like 2 minutes after, and I'm trying to catch that point, which is how we knew we should just stay in the longs. It's like literally the same map. Okay. And all the way through, like even during MOC, like you saw this 5970 stick. Usually, like on any other day, like right at like the 350 mark, like 10 minutes before close, like you can actually see these nodes like completely get swapped, the 5945 and the 5970. But for the past like 3 to 5 minutes that I just showed you, the 5970 was still the clear winner. So it was the right thing to do. Like if you actually go back to the chart, and if I show you where I entered, like I'll kind of just share a little bit of insight with regards to like how I enter. Like even though we're going through all this chop, like if I expect that through MOC, like the 5970 is still going to be the king node, then anytime like we get a dip down closer to the 59 like 45, like that's where I'm going to buy. Like I actually don't buy these green candles to the upside. Like that's how you get shafted, because by this point, like your call premiums are already skyrocketing. So generally, just being able to catch that like the base of this candle right here at the low of range is the key. So right when it wicked down, I caught it and I literally stayed in it and I was down like 20% or 30%. But this end of day pump gave us the 200 to 300% trade. So those were pretty much the two that I took, and hopefully that makes it clear with regards to like why I shorted like the 6020. Like I think that was a pretty big question that a lot of people asked. It's like, hey, like how'd you know 6020 was going to be the peak? I knew it was going to be the peak first off because I used price action first. So like I'm looking at where double tops can potentially play out. Number two on Heatseeker, 6025 was the next, highest node outside of the 5970. And another question that people asked is, okay, hey, 5970 was there like throughout the entire week, right? Like even on Tuesday and like Wednesday, like it was very, very brightly lit, the 5970 and the 5945. And one of the questions that people asked me is like, hey, how did you know that was not a hedge node? Because on FOMC and like CPI and PPI days, like you generally always have dealers hedging for downside. And in this scenario, like we debunked that, right? Because I mean, we even like the great thing is that like you got to be able to listen to your peers that are talking. Like I think Dixon was the one that first mentioned it, and like if it wasn't for him, like I probably would have been a little bit more doubtful too. But what the fuck? How come I can't search? Am I not doing the Discord search right? No, don't make me do this. It's just gonna take forever. People talk so much in that channel. So. It's so weird. I could have sworn this is the search syntax in Discord, but it's not. Hmm. Andrew, I haven't used Bookmap and I haven't used Exo charts before, so I'm not sure if I can answer that. Isn't Bookmap just a? Doesn't that just show level two data? Like that's the bubble map, right? All right, so you probably get it here. All right. So this is it. So Dixon at 8:57 a.m. This is all Eastern time. He was looking and he was the first one to do a comparison. So he said, "This is the map on on Wednesday, like Wednesday close. We saw this like 24 mil, 25 mil, and then he mentioned that the contracts have been stacking up since the morning, and it went all the way up to 87 mil and 52 mil. Like right off rip right here, like we know that the idea of it potentially being a hedge is somewhat debunked because this number grew by at least twice the amount. Like the only reason like dealers would hedge for today was if they expected some kind of crazy event due to the war to happen during Juneteenth. Like that's why this could have potentially been a hedge on Wednesday night, right? But the moment you see this number growing even further, like you pretty much know that the market dealers want to close price within this range. Like they want to like they eventually want price to close within 59.70 to 59.45. And little do you know, like towards the second half of the day, like that's literally all we played around. Like, we hit like 6025 and then since then like it was a wrap. Like they couldn't escape those vice grips. Okay. So that's my explanation with regards to like going on forward, how you determine if something is a hedge node or not. It's pretty much the rate of growth. Like I always talk about the rate of growth and like the delta of the growth of each node. And like this is very important because like if this was 25 mil, 25 mil, and even at market open, like this is 25, 25 mil, like I would have been pretty certain that like those are hedge nodes and I would want to ignore them. Even if you got this 87 mil and if you completely subtracted 24 mil, like this would have still been at like 53 mil, right? Which means like even if we completely removed the positioning that was there left up until Wednesday, like this still would have been the biggest node by far because the greatest one after that was like 11 mil right here. Okay, so this would have still had like five times the amount. So That's pretty much how you could play it and how you could determine. Andrew, I don't know what MBO data is. Is it MBO or yeah? I think I used Bookmap before. I'll have to look at what new features they have, but Heatseeker uses an entirely like different data model. Like I use the and also I think the data sources that we use are probably going to be different. Yeah, I've never heard of absorption signals. Like, are the I don't know if those are proprietary things that they use, but you can send me a DM on like Discord later, glitch SPX, and like I'd be happy to take a look at it because throughout the week and throughout the month, like people have been asking me like, hey, how does this tool differ with this one? And every time, like I just show the results to them, and then they're like, okay, I can see where it differs, and like they do a lot better with Heatseeker. Like it's just a lot more accurate for them. All right, so Ibrahim, like hopefully that clears your doubt with regards to like how like at a certain point I was like, yeah, these are not hedge nodes anymore because we saw massive growth in these nodes. Yeah, I'm not entirely sure, man. Like when I used Bookmap a long time ago, or when my friends told me about it, like I saw it as something that pretty much aggregates like level two data to essentially like do bubble plots of where buyers and sellers are stacked on the ladder. But that's very different than what we're doing here. Like this is pretty much a prediction of like net notional dealer positioning at any given time in terms of options. Yep. Any other questions with regards to like the whole hedging confusion or how do you determine your entries when the node is like 50 points below and you don't know where the rejection is going to be? Like that's kind of the main purpose of this one. Like I think those were the top questions I received are like, hey, at what point do we determine if pre-existing nodes from like days ahead are expected to be hedge nodes and somewhat ignored, or can we expect them to have some weight? And like I answered that question. Number two was, how did I know 6920 was the top? And then I think the question after that was, how come we broke back above 5970 and then came all the way back down again? Because people expected 5970 to be a ceiling. Yeah, I think another question that people asked is, all right, hold on. Actually, I think I remember when JSL said I took short at 2:17 p.m., but because I wasn't sized for zero, I stopped out for a small loss. We were at 61.8 and keynote at 59.70. Should I be entering between the 61.8 and .79? Not always have it. Yeah, so that area is a zone. Like you always have to treat it as a zone. Like sometimes you might even enter at like the top of 50%, but if that is 2:17 p.m. Eastern, like you should not be having a stop loss on that. Like I would highly suggest you just take like a really small lotto position if you have a lot of conviction that it's going to tap 59.70 and you just write it. Like even my position that I got at the end of the day, like I bought it for $75, so the contract price is actually a 0.75. And honestly, like I didn't care if it went to zero because it was so cheap. But like the 5970 was the inevitable king node that I expected price to eventually revert to, and I was depending on MOC to pretty much give it the unwinding action that it needed to kind of let it fully fly up to 5970. Okay, so I think that one at the lowest it dropped from .75 to .50, which means that it was down like 33 or 35% at one point, but I didn't care because like I was sized small enough where even if it went to zero, I would have been chill. But the bet was that we hit 5970. If you've got less than 2 hours in the close, like you've got to size for a full loss on that one and just take it. Like the premiums just whipsaw way too hard in the last like 2 hours, and also because of theta, like you're even if your move happens in the way that you want, like the contracts kind of decay like really fast. So it's super easy to get stopped out. Like even if the contract is going in the direction that you want it to go, like you can get stopped out because theta is essentially outracing your delta effect. So that's just like it's just a lesson on Greeks, and I'm gonna go ahead and do a session, like a full session on how to like evaluate Greeks and how to leverage that to pick the right contracts, like when to take a larger position to have a 50% stop loss as opposed to taking a smaller position and having a 100% stop loss. I'll go ahead and go over a lot of that, but I don't like to overload people. Like the first thing that people in the server need to do is they need to get the maps figured out. Like you should be able to look at these maps in the morning and know if we're gonna have a downtrend day, or if we're gonna have a range and chop day, or if we're gonna have an uptrend day. And like today, it was clear like we're gonna have a downtrend day. But then after we're gonna have a downtrend day, and if they ever kicked it below 59.70, you knew that we would be stuck in a chop or a range because they had that pin going on between 59.70 and 59.45. Okay, so even though a day starts off as a downtrend day, it can finish as a range day. Like that's the most important thing you have to understand. It's like you can't have a permanent bias with regards to how you expect the price to move throughout the day, because as I said, dealers they're repositioning and they're shuffling their positions around and their hedges around literally every second. So why should you stick to one bias and say we're gonna have a trend day up and like stick to that bias? Like you've got to remain fluid and flexible. Yeah, Greeks are like, I mean, John, Greeks are one of the things that like I usually don't like wasting time on, because the Greeks are one thing that is not subjective at all. Like it's very objective, and like everybody needs to see them in the same way. Like you've got delta, you've got theta, you've got vega, you've got gamma, you've got vana, you've got charm. Even third derivative Greeks, like you've got vama and speed. Like you have to research all of them, but like you're gonna get the same answer from anybody that you ask, because those are predetermined by like the market dealers in Wall Street. Like nobody can add a subjective twist to that. Like if you ask somebody about trend lines, like you're gonna get 10 different answers. But in terms of Greeks, like nobody can argue against it. Like it's literally the Bible when it comes down to trading options. So like you don't need to hear it from anybody in particular. You just need to go read up on what it does and use like it. Everything else is like judgment call after that. Like the reason, like somebody pinged me earlier and they told me like, how come you suggest out the money contracts? Like everybody I talk to recommends and suggests at the money and in the money contracts. But like, my first answer to that was like, first of all, if you've got a $1,000 or $2,000 portfolio and you're trying to trade SPX, you're not going to be able to trade at the money contracts, because at market open, at the money contracts can cost anywhere from $800 each to like $2,500 each, depending on what the IV like implied volatility is, right? So, general rule of thumb, like if you've got a massive portfolio, like when I trade on my six-figure portfolio, like I always trade at the money or in the money contracts, because like I don't want to fill 1,000 out the money contracts and have liquidity issues when I'm trying to get out, right? So if I can get 100 like $1,000 contracts instead, like that's fine, because it's a lot easier to get in and out of 100 contracts than it is to get out of like 10,000 contracts. Okay. And then another one is like, everybody looks down and shits on like out the money contracts, right? Like it gets a bad reputation. Like out the money contracts with like less than like 0.10 delta, they get a bad rep. But quite honestly, like if you know what the hell you're doing, especially with Heatseeker, especially with your analysis of like zero data expiration, and you can snipe your entries and your exits, like an out the money contract is going to give you a higher percentage ROI than an in the money or at the money is going to give you. Why? It's because the contracts are really cheap, and that's how the gamma multiplier works. Gamma is a second derivative Greek in terms of option contracts, and it increases your delta, which is a first derivative Greek of option contracts, for every $1 move in the underlying. So it pretty much can have an exponential impact and move in terms of how your premiums move, where if you're expecting to catch a big trend and you're expecting that trend to play out quick, like playing out the money is always going to give you a higher percentage ROI than trading at the money or in the money contracts, okay? If you've got a shitty chop range of like 20 points or 10 points and you just want to scalp, in that scenario, you can significantly benefit from trading in the money contracts, And the only reason you would benefit from that is because the intrinsic value is already high as it is. And also the theta decay is not going to hit you as hard. Like your delta is already at like, dot 40 or dot 50 at that point. So even if the price moves by like 1 point or like 2 points, like your premiums will move pretty decent and you can get a good scalp out of it. Yeah, the 5970 contract when the price was at 6,000 was very cheap. Like when the price hit 6018, like I took 5950s for like a little bit over $1. And like let's not forget like those ones went in the money. Like I think they went in the money today, right? Hold on. Like I actually don't know because I sold out of those and I rolled them out, but I think yeah, okay, 5950 is never went in the money. Like they got pretty damn close, but like I was already out of those on these drop candles right here because I didn't want to get chopped up or like I didn't want to get caught in this bearish retracement. But yeah, like the 5950s I entered like here and they were a little bit over $1 a piece. Like it was really really cheap. But if you wanted to get something that was like at the money or in the money, like it probably would have costed you at least 20 bucks on a day like today. It's very expensive. So that's pretty much like that's my feedback to people that read things online. Like when you read things online and when you're learning things from other people, I'm totally okay with it as long as you understand like why people preach what they preach. Like the reason those people are probably saying that is because like they don't have a good 0 day expiration strategy where they don't know if they're gonna get caught in chop and they don't know if they're gonna have a downtrend day. Like they don't have Heatseeker, right? So they don't have like that unfair advantage. And if you don't have the unfair advantage, then yeah, you should definitely be trading in the money or at the money. That way, even if chop like this happens, like you're not getting crushed by theta decay, right? But quite honestly, like I like the stress-free factor of out the money contracts because like you can get them for like $100 or $200 a piece, and like even if that shit goes to zero, like I'm down $100 or $200 on that day. If an in the money contract that's like $1,500 goes to zero, like you're out of pocket pretty big, right? So it's all very like situational and conditional. And a lot of my teachings and like a lot of my education revolves around that. Like I don't treat anything out there in the trading world like the gospel. Like every situation is different. Every person has a different trading personality and they just have to find a style that suits them. And like I don't even suggest and recommend people to trade the way I do. Like I trade like a fucking degenerate sometimes and like I do a lot of dumb shit and like I don't want people to do that, right? Which is why when I'm talking in like chat, like I'm always very conservative and I tell people like, yeah, manage risk, like, make sure you're sizing appropriately, but hey, sometimes like I'll go in a position that's like 50% of my portfolio, but that's when I have like an A plus, like a triple A plus setup, right? Where like I'm so confident and I've seen this so many times and like I'd be ready to stop out for like a 10% loss or something. And like that's totally fine. So like I know a lot of people like when they talk with me and when they ask me questions, they're looking for a lot of absolutes. They're like, hey, like what should I do? Like what point should I sell? Like what point should I buy? Like what contract should I buy? It's just all situational, and I don't have a one size fits all answer. Okay. Like even when I'm alerting, like sometimes I'll alert a contract, but I'll be taking a different contract. And the reason I do that is because like the spectrum of people that we work with and we trade among is so different. Like you've got people that are trading a $50,000 portfolio that have over 500K in their bank, so their risk profile is a lot larger, right? And then you've got people that are like $50,000 in debt and they're trading with like the last $1,000 that they borrowed. Like I never wish that upon anybody, and like I never suggest that, but like frankly, there are some people that are in that position. So I try to give people the insights and I try to tell them the why behind a lot of the decisions that I make, but like you shouldn't look to copy that because you're not me and you're not in my situation. Like everybody is in a different, stage in their trading journey. Um, but like one thing I do want to hear from people is that they won. That's the thing that I care about. It's like if you made money, that's good. I don't care how you made it as long as you made it. Okay. So like don't hesitate and don't be shy to like take learnings from what I share and like put your own twist on it. Like for all I know, like if Danson, wants to use the Heatseeker and he wants to use Super Trend with it, I honestly don't give a shit as long as he's making money. Like if he's making money, that's great. But if he's losing money, then I'm gonna be pissed. you know? So, I think a lot of people do that. Like, it's just, just, take my stuff as like fundamentals and treat it as the foundation, but like you could layer, your own sauce on top of it. All right. Any other questions? No, dancing to me, you're not catching strays. We're good buddies. Like, and I told him too. I was like, man, I really don't care what you use, but if you have so many indicators on your chart that you can't clearly mark critical price levels and like see the double tops and the double bottoms and see the liquidity hunts and stuff like that, then you've got too much shit on your chart. Like you've got to clean it up. I mean, if I could trade a naked chart like this with just a few lines on it and a couple of dots on it, like anybody should be able to do that. Hey, the rest of it is all risk management and psychology. Like you've just got to be like very emotionless when you're trading. So the less you have on your chart, the more you're able to focus on the things that matter, which is like what is actually going through your brain while you're trading. All right, I'll give it like a minute or two to see if I get any follow up questions, and if I don't, then I'll go ahead and call it a night. I'll try to do like one of these recaps a week at least, because I know a lot of people have questions, and like I got to put some more videos out there so people can just go through them. Like the real, like the live examples of the heat maps help because that way, like people when they look at it, they'll be able to kind of spot out like should I use a momentum based strategy, should I use a reversal based strategy today, like how long should I hold my contracts today, like should I trade in the money contracts or should I trade out the money contracts. Like there's so many different decisions you can make dependent on the type of map that is being presented to you. So that's the true value of this. Does it just have direct CME data feed and rhythmic feeds? No, it has nothing to do with CME and rhythmic feeds, buddy. Like I pull, like a lot of my data is pulled from 4 different sources, and like the brunt of it is from SIBO, which is the Chicago Board of Exchanges, where greater than 90% of like SPX data feeds through. Yeah, I don't use CME or rhythmic at all, or maybe I do and I'm not sharing it. Who knows? Alrighty, I'm going to stop the stream then, and then if you have to reference it, I'll have it up on my YouTube channel so you could just go ahead and review it. But hopefully everybody had a good day today. Like I'm actually looking forward to OpExes now. Like it was a very fun day to trade for me personally, and hopefully it was for everybody else as well. Like this is mainly the area that a lot of people got fucked up. But like I told people not to trade here, so hopefully you listened. And if you did, like we had a lot of great volatility. Like we had this down move, had a nice up move, good down move. Like there was a lot of money to be made today. Like this is literally the day that you should be like waiting to trade. Yep. All right. I'll see y'all later. Have a great weekend. Oh yeah, I'm gonna see a lot of you tomorrow. I'll see y'all tomorrow.